Hey traders, Akil Stokes here of Trade Empowered, and want to give you a quick middle of the week video with an emphasis on why it's important to read structure and know how the market moves. Now, usually when I talk about reading structure and harmonics and ebbs and flows of the market, I'm teaching traders how to trade, the basics of simple patterns, how those form into advanced patterns, predicting where the market might go. This time I want to touch on the psychological aspect of it and how reading a market properly, or knowing how to read a market properly, can help you to keep your cool in trades that will seem like they're going nowhere. What we're looking at right here is euro dollar. It's a trade we took yesterday in the live room, and we just hit target one. And you guys don't need to see this, but we're actually, I need to get stops to break even. Let's do that first. But we entered the market right about here. It's probably about 10:30 yesterday. So all the way at this mark right here, and we entered on again a CTS base score, and I'll talk about that in this week's live room review. But as you can see, we entered the market, and then the market basically went sideways for 1, 2, 3, 4, 5 for about for a long time, all of yesterday afternoon, all of last night. Now, obviously it's easier because I wasn't up watching this, but say this happened during the day. Say you were in a position, or maybe you're a trader that's overseas and you were able to watch this market all day. It can drive you crazy. You know, you have an order in, the market's going nowhere. You're saying, oh man, I just took maybe 2 losing trades in a row. This one hasn't rolled over and won yet. We're holding a channel here. This is probably going to be a loser too. And I say that because usually the more time that you're in a trade, the easier it is to psych yourself out. The easier it is to come up with reasons for why the trade is going to fail. Most traders don't think, oh, I know it's going to win, I'm going to keep my confidence. They're saying to themselves, well, if it was going to win, it probably would have won already. And again, it's easy to psych yourself out and make a mistake such as either just exiting the trade, maybe for a loss, or taking a target early. But here's how here's something that can help with that. It's just the basic analysis of structure. Our double top was right up here at this structure level, right up at 33.98, and we have protection from the 34 even handle. As long as the market doesn't come above our double top, and this is doesn't create a new structure high or higher high, higher close, there is nothing to worry about. If you're not sure if a new structure high is or higher high, higher close, we're going to go over all of that in the technical trader workshop, or I'm sure you can go back and watch one of the many videos that I have here on YouTube. But as long as we don't penetrate that level and break that level, there's nothing telling us that this trade is a bad trade or an invalid trade, because a bad trade would be one where you don't follow your rules. So there's nothing telling us that this is going to be an invalid trade. So as we motor along here, yes, it's uncomfortable, but there should be no pain. Now, if you want some confidence, check out our little friend, the RSI. Again, RSI was overbought originally, and you can see actually we went overbought twice on our double top with Rsi Diversions, which is what helped us get into the trade. But look at our price action. We basically come from this high to this high straight across. What does our RSI do? We come from this high. When we retest and get this high up there, bang, we get a lower high on the RSI. That is a good sign. That's called Rsi Diversions. That's a bearish divergence on the RSI. We're bearish in this trade. That is a very good sign for that. So a little trick like that can help you keep your cool, because as long as this RSI is coming down, we're going sideways, we're going down. Even though we spike up here and create technically a higher high from our last previous high on the RSI, guess what? We don't penetrate our previous double top mark up here. So this is a good sign, and being able to read the market, being able to read an indicator like that, again, helps you keep your cool in the market, stops you from making mistakes, and well, you're able to reap the benefits of a trade. Again, not a big trade, but 35 pips for our live room. With the lack of action we've been having in the last couple of couple of weeks, this is pretty good. So that's it. Wanted to give you a quick lesson. In fact, I'm gonna throw in one more for you. I did a video for my syndicate members last night, and we talked about the Dollar Cad trade that we took last week. I'm gonna throw that into you. It gives a great lesson on similar aspect, trailing stops, trailing targets, and really decision points on how to tell, hey, is this trade gonna work out in my favor or isn't it? And of course, if you're interested in the syndicate, just go over to the Trade Empowered website. It's $20 a month. You usually get about 1 to 2 videos a week. Recently, I've been doing only one because, again, the markets have been moving slow. But we do have access to the new chat software, which has been getting rave reviews. Where me and Jason are pumping in at least, I would say at least 5 potential setups a day between advanced patterns and some structure-based setups as well. Again, for $20 a month, or you're getting a hell of a steal. But anyway, check out a little clip from yesterday's or last night's syndicate video on a similar topic, and I hope this was educational for you guys. All right, and yeah, before I leave, I hate saying this, but I got to. If you like these videos, please like them, please share them. It does a lot for getting my name out there, getting this information out there. On the quest of teaching more traders. So that's if you like it, share it. That'd be a big help for me. All right. Take care, traders. I'm going to throw in that piece of the syndicate video, and I will see you this weekend with the live room weekend review. Hey, syndicate members, Akil here. Long time no see, but we are in the dog days of August, and well, there's just not a lot out there on the higher time frames that is really catching my attention. So I wanted to give you first of all an update on Dollar Cad, and I actually have a few of the major pairs I want to take a look at. Dollar Cad, last week we sold it around 105.27. You can see it sitting here. We had a cipher pattern here in pink and a bat pattern a little higher. Whichever one you decide to take should have got filled, depending if you front ran the bat or not. Anyway, like New Zealand, this pattern has put us through some pain. We shot right past entries. We came down. We've retraced, and now I put this on my Facebook page earlier today. And if you're on Facebook, please go over and like my page. But I was watching Canada on the hourly chart, and we came to a really crucial decision point. We were channeling right here. You can see the market came down, hit this level, bounced up, spiked it again, bounced up, and we spiked it one more time. And I said this would be a key decision point, because if we can break and close below this level, this would be a very good sign for our trade. Again, just basic structure analysis, creating lower lows, lower highs, lower lows, new structure low should tell us that this trend is going to continue to the downside. And it doesn't necessarily mean our trade is going to win. It gives us somewhat of a positive vibe for it, but what we can do is we can roll stops down over previous structure highs. So before stops were up here somewhere, let's say about 100 and whatever pips away, maybe 100 pips away. Because we have this new structure development, we've broken this resistance level, which is now going to act as support. We can now roll stops above previous structure highs right here, because, well, if the market, and even on the 240, let's go back out to that, if the market comes back and breaks past that low, well, there's a good chance that this market is going to continue up and we're going to be stopped out. So it stinks for our trade, but if we're going to be stopped out, we want to conserve as much of that loss as possible. So I'd much rather be stopped out for maybe 30-something pips than stopped out for 90 pips or however much it was. And you can look at this the same way. If you want to go down a time frame to the 60-minute and trail it, there's actually a short entry right here for trend continuation traders as we come right back into the structure zone. But as long as we keep doing stuff like this, as long as we keep retracing, creating lower lows, retracing, lower lows, we can go ahead and roll stops right at those retracements, getting them right here as soon as this lower low is created. And when this new structure low right here is created, boom, moving them right there. And that's a fantastic technique, not only to again, protect yourself against stops, but if you happen to hop on a pair that you think is going to be trending for a while, but your analysis tells you that, hey, this may trend all the way down to a lower point. It's a perfect way to trail stops at structure and maybe not necessarily shoot for a second target. So that's on Dollar Cad. Did want to take a look at Aussie dollar, AUD.